Welcome to this GICP webinar, Careers in Credit, Your Pathway to Success. My name's Kevin Boyle, Fitch Learning, and here with me is Edward James of RCQ Associates. Edward founded RCQ Associates after 10 years experience in financial services, and his firm connects outstanding talent in financial markets, covering Europe, North America, and APAC. So very well qualified to provide practical insight into this topic, Careers in Credit, Your Pathway to Success. Welcome, Edward.
Thank you, Kevin. Thank you, Fitch Learning, for having me. I'm looking forward to sharing my thoughts and insights over the next 45 minutes.
Now, Edward, as you know, we've prepared some questions for you, but we also want to encourage the audience to submit questions using the chat function, and later on in this webinar, my colleagues will draw these to our attention. But let's start with the following, Edward. From your perspective as a recruitment professional, what makes a career in credit analysis such a compelling choice for financial professionals today?
Good question, Kevin. So the careers in credit, they're so broad. It was almost hard to sort of work out actually how to even start asking that question, because there are so many different paths you can do. First of all, it's a really interesting and diversified choice which you can take, and the routes that you can take up. I mean, fundamentally, we talk about credit analysis, analytical tools and experience. That's really fundamentally important to that. And even as you go along your career and progress up seniority levels, that's so important. So you can look at credit analysis in so many different ways, and there are plenty of different firms that you can look at. So you could look at the banking sector, and within that could be investment banking, corporate banking, retail banking, but also in the investment community, there's a breadth of roles within that. And then when you look within subsectors of credit, you know, you've got the corporate credit, structured credit, project finance, you know, like high yield, investment grade, so on and so forth. There's just a real breadth of opportunities you've got within this sector that you can have a look at once you actually enter it. So
very, very broad. So effectively something for everyone looking for, you know, that specific career, that specific niche within the credit market. So can you break down the range of career options within the credit industry, and then also what kind of candidates are best suited for each role?
Okay, so I'll try and break them down into sort of sub-sectors. So you've got kind of almost the credit risk side of things, and that could be counterparty credit risk. So you could be at a bank where you're lending to another bank, or there's lending facilities there, and you're looking at where things are, and that might be a bit more faster paced, and you might have to look at things in, you know, analysing another institution within a matter of hours. But otherwise, you could go and differ that to almost a credit analyst role or credit research role, where actually you might look at an entity, and you might go and look at that entity for anywhere between sort of maybe 2 and 4 weeks. So you really look at that in-depth analysis there. Then within the credit sector, you've got some of the more relationship roles. So relationship roles at some institutions can be involving, clearly by the nature of relationships, speaking to people, but also they still quite often involve some of the credit analysis. So that could be what we call or some institutions would term first line credit. Mm-hmm. So first checks, making sure that everything sort of makes sense, and then it might get passed on to a second line core credit team who do perform the in-depth analysis. And then you've got the kind of credit within kind of sales, trading, investing, portfolio management. So if you're an investment manager, you can basically buy and sell credit for any form of entity. Mm-hmm. So yeah, a lot of different sort of options really, and it depends on sort of what you think, whether you want to do more niche analysis, more in-depth analysis, more dealing with people but within the credit community, and otherwise making the more investment decisions, whether it comes to sort of buying and selling credit transactions.
So not just a very broad range of topic areas, a broad range of skills as well, as you said, the analytical through to relationship management.
Yeah, and if I had to really break it down, and a really good question, because it's, I'd say, or point, it's, I'd say to be a good credit analyst, you need to have really strong analytical skills. You also need to have good quantitative skills, and also, you should be able to develop good quantitative skills, but also having relationship skills. I think for any career, having good relationship skills is really important, but also if you want to develop upwards as well, some of those more client-facing roles, they can be where you can add value, and in the end, you can really progress your career upwards if you're building relationships with more complex transactions and more high-end and high-ticket value transactions.
Just developing that theme, Edward, so is it the case that it's once you're in one of these roles, you can transition across?
Yes, there is definitely transitioning. There's definitely core skills. We see people, there's a natural evolution, and you could be working at a bank where you're kind of more in a middle office role, so you're more trying to get to understand actually what credit analysis is and what credit is, and then you might move to a more front office role when you've really got to grips with what the fundamental parts of the role is. And even from a front office role, you could start in a front office role if you've got good qualifications and that side of things, but you might be in a more front office assistant sort of role where you're working in a front office environment, with people making investment decisions, for example, but you're more supporting them with the aim for you to go into that side of things. But yes, we see people moving upwards in terms of the value of transactions they're dealing with and complexity of transactions. And we also see people moving all over the world actually with these transactions. It's not as though to be a good credit analyst, you have to be focused in one specific geographical area. It really enables you to go, I see people travelling all over the world.
Okay, so the opportunity to travel is obviously something which is very attractive to many candidates. But there's also something else, and we couldn't have this conversation without addressing this particular point, Edward. Could you discuss the salary trends you've observed in the credit industry, and how do these compare with other sectors within finance?
Yeah, I mean, good question. So I've seen credit salaries increase. So even if we look at core indicators, so debt issuance, debt and credit and loans has been going up and up consistently over years. You've seen some sort of blips, maybe sort of COVID and financial crisis, but there's been a consistent trend upwards of people needing to lend more money, and that's people in terms of institutions, could be sovereigns, so the UK, US government, so on and so forth. But yeah, there's so many different parts to it, and then as the sector evolves and increases in size, there's always a demand for more people to come in, and Economics 101 tells you if there's more demand for good people, there's more pressure upwards on salaries. So yeah, we've seen salaries definitely evolve, and as the more complex tasks evolve, some of the more administrative and reporting functions are starting to be more automated, and increasingly with AI and that sort of things, we're seeing them sort of people doing less of that and more of the manual tasks being automated, which is good, which allows bright people to be doing analytical, more interesting tasks, which allows them to earn more money.
So just looking somewhere off into the future on that point, what you described there was a bit of a mismatch, imbalance between demand and supply. The demand is currently greater than the supply. Do you see that continuing in the near future? I won't ask you to go beyond 3 to 5 years, which would be unfair.
Well, look at my crystal ball
exactly,
here.
Yeah.
Look, I think there is always going to be a need for credit and lending. That is never going to as far as my crystal ball will tell me, that's never going to go away. But it is a really important part of the Western economies, or actually just global economies. And there is still going to be increasing needs for that, whether that's more in certain sectors, whether it's private credit, whether it's structured credit, corporate, sovereign, so on and so forth. There's definitely needs for that. So I don't think it's a sector. I think it would be pretty nigh on impossible to be a sector that would sort of go away. There may be ebbs and flows, but looking at the trend of where it has gone and where it should be going, there looks like it's continually a good area to be in.
Let's pick up on that point about the different sectors. In your recruitment experience, how do the skill sets and career trajectories differ for individuals in, let's say, this newer area of private credit compared to corporate or structured credit analysis?
Private credit has been the boom area. We just touched on that, but actually it's there's been an explosion. We've seen these private credit funds that have basically taken away some of the market from what traditionally sort of banks would have been offering. So there is some degree of displacement. So that's some work which might have been traditionally done by a bank going onto a private credit fund, but it is a growth area there. And then structured finance and structured credit, I think that has some areas are certainly sort of constrained a bit by regulatory effects. So if you've got regulations in there that may constrain lending, but actually where we've seen with things, regulation is still there and is a good thing, because we've seen what happens when there are issues or there's a lack of regulation. But the regulatory sort of wins seem to be sort of allowing for considered lending and considered lending opportunities. So I'd say certainly private credit seems to be a growth area, structured credit seems to be a growth area, and yeah, there's a lot of opportunities within them.
You touched briefly on the regulatory environment. Is that something someone looking at a career in credit should be thinking of?
I think every credit analyst to some extent has to consider a regulatory environment, and you can also look at regulatory in a load of different ways. You could also look at that as internal regulations. So it could be actually these are our internal regulations, but as I think you and I would understand regulations, it might be issued by external regulators. So yes, I think regulatory interaction, regulatory as your career progresses. So you know if you become more senior, you'll have you may well have interaction with core regulators. You may even have some influence on where regulations might have, or they might want to listen to hear what your thoughts are as your career evolves. But yes, understanding of regulatory constraints, particularly if you're at a bank, when you've got to look at kind of capital and where assets are being looked at, that is really important. And it's, you know, you might want to look at this area or that area, depending on the riskiness. But regulations, as I said, are good. And credit analysts are good at understanding, or should be good at understanding, where assets should be looked at, and within that, obviously doing the actual fundamental analysis. So looking at actually where you should be lending to, investing in, any of those things.
Picking up again on one of the points you just made there on fundamental analysis. Fundamental analysis is something which is common across lots of areas of analysis in financial services. So, you know, especially for those looking to transition into credit from another area of finance, what advice would you give to them to make themselves more competitive in this job market?
I think training and doing courses, hence partly why we're here, but upskilling and adding to your knowledge is definitely going to help. If we really break it down in terms of if someone in the audience is looking at this and they're really just looking right at the beginning of their career, even core things like really upskilling your Excel. We all know, learn to love and hate Excel in many ways, but I think Excel is often the cornerstone of where things are, and then you can obviously build on that. It might be Visual Basic, it might be Python, it might be other programming languages, but the way that the world is going, the more that you can understand some of the more technological tools, the better placed you are to actually understand how decisions are made, and also on the flip side of things, to be able to actually make decisions in the end yourself. So in short, training, upskilling from a technical perspective, I think they're the main things, and just generally reading about the topic, even listening to podcasts, reading the financial news. There's so much and so many easily accessible ways of getting information out there.
I want to pick up on something you mentioned in terms of making sure your skills are good in Excel. Do you see any trends, because we see it elsewhere, trends with respect to use of Excel relative to things like Python? Or
yeah, there's definitely been, as there are more complex tools, there's definitely more use of additional coding. And you've got two people. You could be someone who's reviewing the code, or you could be someone who's writing the code. Mm-hmm. I would almost describe that as the sort of reviewing the code is sort of heads up quantitative skills, and writing the code is heads down quantitative skills. So different jobs tend to require different things, and there's no right or wrong, because you can be someone who actually really enjoys, building models, and that is a really good place to go. But also you could be, the people who are doing heads up and actually being able to actually talk to people, explain about what the models are and actually and where things are. That can also be really helpful as well. I've gone a bit of a tangent towards like actually the model bit as well, but that's one, as we said, credit's really diverse, so that's one really interesting area that someone could look at.
Edward, I'm going to steal that phrase, heads up and heads down at modelling. How has the demand for credit analysts changed in recent years? And I mentioned earlier on about currently the difference between demand and supply and the impact on salaries, but more specifically in terms of the different areas, how do you see it? Where do you see it heading in the future?
Credit is definitely, as I think I've touched on, but it's credit is actually. Let me just take a step back. Let me go all the way back to the 70s and 80s when the accounting sector really worried. They had a load of bookkeepers, and the accountants were like, okay, these Microsoft Excel, like these spreadsheets, were coming in, and they were sort of thinking, okay, what are we going to do? And actually, you look at the accounting sector, how it's evolved over the last 40 plus years, it's increased dramatically. And actually, for credit and decision makers, the tools that are coming in, okay, you might get some jobs that might be offshored, but they tend to be more reporting and more, things that computers can do. But the jobs that are here to stay are jobs that are dealing with people, like understanding that analytical functions of what, and actually interpreting the decisions and being able to explain that to people, and whether that's investors, whether that's people internally, or otherwise, whether that's just following processes to some extent as well. Mm-hmm. But the more add value you can do, and the more that you can actually use independent thought and thinking about these things, the better I think your career will be involved. And those roles are here to stay. And I've seen people who have moved from reporting and upskilled themselves into more analytical roles. And then you see people, and you've seen plenty of people move from credit analysis roles into more investment roles, and you see people moving up the value chain as their career evolves.
I'm interested that you mentioned the 70s and the 80s. I was there in the 80s as an accountant, and I can certainly see where you're going with this career trajectory, and I've seen that myself actually in the markets, and you can see it continuing. So there's one other key area which is impacting the whole of finance, but I'm sure credit as well, and you'll share your insight on this. With the evolution of technology and finance, what impact do you see on roles and skill sets within the credit industry? What impact is AI going to have?
So if you look at nearshore options, which is basically big major financial services centres, so it could be London, New York, etc., etc. Those roles are just going to become likely to become more analytical, more add value, in theory more interesting tasks where they will use your brain, your intellectual capacity, but also your ability to convey your thoughts to other people. That is my perception, and that's where I envisage, and that's generally where the trends seem to be going. And then offshored, there may well be some more offshored roles that require some manual human input, but and there'll be extra roles which will going off to offshored locations as well.
Thank you, Edward. We're going to give you a moment just to pause there. You can capture your breath. And we'll also give you a moment, those of you in the audience, to perhaps add some questions to the webinar chat. that gives me the opportunity just to highlight that if you're looking for more information in careers in credit, I'm excited to say that we're launching a new guide to careers in credit. We've worked with Edward and his team on this to produce this handbook. It contains lots of valuable information about the sector, such as insights on key roles, including essential current and future skills that we've discussed, more information on career pathways, and perhaps most importantly, as we referred to earlier on, salary benchmarks across the regions and across the different sectors in the industry. So whether or not you're looking at your first move or planning your next move, hopefully this guide will provide you with some insight and clarity on what you need. And I'm delighted to say that anyone who's attending the webinar today, this event, you'll be sent a copy of this over the course of the next few days. So we hope you find it a really useful addition to the great insight, Edward, that you've provided with us so far, but you're not off the hook yet. So we will now go to questions from the audience. How can I build my personal brand and awareness in the credit industry?
Different ways to go about it. Building a network is actually quite important. So again, that could be going on a course and meeting course mates. That could be speaking to colleagues or even ex-colleagues and just keeping in touch with them. The credit diaspora from most firms is actually pretty broad, and you'll see people moving quite often from one firm to another as they want to have their like different experiences or careers evolve. And you also see people go up the career ranks, plenty of people going up within the same firm. I, as a headhunter, often talk about sort of being able to talk on LinkedIn or post things on LinkedIn and that side of things. Same as any social media sort of tools, being visible as a credit specialist in LinkedIn or any other tools, it can be really useful. And there's so many different platforms, providing you're at a firm that is comfortable with you providing that platform, because we talked about regulated entities before, and some regulated entities might not be as happy talking about independent views and thoughts. So you might need to get that checked. But often actually, if you say you want to go and talk about things publicly, you can do that. And then also something I do very often, attending conferences, listening to people, building your network, like the credit rating agencies. I'm thinking about one in particular, but credit rating agencies often have many conferences that are publicly available that you can go to, and also events online, basically. So just being able to network and build your knowledge base and the people you know within the industry, I think that's always key skills that will set you up
Edward,
for future success.
That's really useful advice. Let's follow up now with a more granular question here. What are the typical entry-level positions in credit analysis, and what career progressions can one expect from there?
Entry-level positions, you would. This reminds me of my days interning in an accounting practice, but it's obviously a bit more broader than that. But effectively, it's learning from others, and it's doing some of the analysis. But you would obviously have supervision of a senior person. Your work would be checked and you'll be involved. But effectively, even from early days, you're able to do fundamental credit analysis. You might have to understand not the regulations, the processes and policies that your internal firm has to adhere to. So that will be a part of your role. But going in as a fundamental credit analyst, going in as a relationship manager's assistant, for example, within credit, going in as portfolio manager's assistant, often the time people will move up within that, but you will get some people who are going internally within that. Just the best piece of advice I could say is, if you're looking at the beginning of your career, think about where you might want to be, but realise that actually it might not evolve in the way that you would expect. It might, and the more training you can get at the beginning of your career, especially the first few years, that just gives you a really base of knowledge, and career should be building blocks. Broader knowledge you've got first, then start specialising and getting into, then building up your people skills, your management experience, personal brands if that's important for that sort of role, and really just becoming that industry specialist. And you see people evolving up in there. But yeah, and how do people evolve? I think it's actually, there's no substitute for spending time and hard work on trying to think about where I want to be. A good friend of mine, managing director, was saying that it's about thinking about where you want to be every year, and it's not just your internal one-to-one and review. It's about thinking, where do I actually really want to be? How can I get those skills? And just making it happen.
That's good career advice in terms of credit, but I'm also thinking of my children as well. I might get them to listen into this later on. We were talking there about starting off in your career. We've a question here, probably more relevant to someone further down in their career. So for someone interested in international finance, are there specific considerations or pathways in credit analysis that would be beneficial to pursue? So I don't know, someone's in Paris at the moment and they want to work in the States, or they want to work in APAC. Is this something they should consider?
Credit by nature is often international. You might get regulations that are different, but actually you see people moving from one city to another very often. You can also analyse transactions or credits, not just in your local geography, but often, a banker, an investor might say, okay, be in London or Paris. You touched on there as well. You might be in Paris, but you might be looking at European transactions across the board, and actually that role could be performed in theory from Paris, but it could also, if you're not looking just at the French market, you could be based in theory, as long as a fund or bank or investor is active in the European market, you could be based fundamentally wherever. So it really gives sort of a lot of opportunities. In terms of the things that someone has to bear in mind to consider these things, I think generally, like, internationally around qualifications are good. Building their IT skills, as we said, is just like, obviously that's very location agnostic, because being able to use Excel or Python and so on and so forth, that could be anywhere. And yeah, I think it's a very international market. So it's just, I guess, probably in line with where my advice I was saying about before. It's about putting in that work, thinking about things. But yes, and also internationally, a lot of firms have got international footprints. So you might work, I touched back on banks enough times, but banks, you might work for an international bank. Most of those will have offices in most continents and many cities within most of those continents too. So often you can have a pick of opportunities, and you can move internally within the bank or any entity and see where things land.
This is a question which relates back to a conversation, part of the conversation we had earlier about someone being in finance already and looking to move across. So this question is, currently in an operational risk role, I'm interested in a role in credit risk. I have a major in math and want to know where I should start to learn more about credit risk to know if it's the right fit for me. So someone who wants to, I suppose, test the waters first before they dive in.
Yeah, it's quite a hard one in some ways, because actually I know we've had two uses of the word risk here, but operational risk is fundamentally fairly different from credit risk. The one thing that I would say is, for this individual here who's focused on operational risk, the one great thing typically about operational risk is you're building really good stakeholder skills. So rather than just a pure credit analysis role where you're just looking more at the spreadsheets, numbers and that side of things, you might want to consider a relationship manager role where actually you have both those relationship building skills and actually credit skills. But in terms of how you'd get involved and try and get some experience in that, kind of try before you buy, I guess, like, reading more about it and trying to sort of understand actually more about what credit analysis is. Again, there's lots of different like trade publications, like articles. I hesitate to mention, but no, I was going to say books as well. I've tried to read some credit books, and they go beyond my patience. But there are plenty out there as well, and to the authors, there are excellent books out there as well. Too many for me to name them, but you can also read up about it. And the mathematical skills that person mentioned, they will come very handy as well. But yeah, trade a qualification. Like the GICP as well, I guess would be a really good area to try and see whether you like it and that side of things. And, you know, like with any learning, you've learnt it if you've done it. And if you don't use it in your specific job, you've gained some extra skills. And actually you've progressed your knowledge base. And we talked about the building blocks. And actually that is a really good base building block to add.
That's a good point. As you said, certainly in my career, I'm sure in your career, you've looked at certain areas, you've looked at qualifications, you've gone through those qualifications, and you may not necessarily, I started out as an accountant, I didn't end up as an accountant. They're very good starting blocks. In addition, the ratings agencies as well, they have really good direct information. Lots of rating agencies, there's Fitch as well. Yeah. So that would be a good source.
Actually, yeah, you're absolutely right. The credit rating agencies as well, there's a lot of information there. Even people who are interviewing for me to join my headhunting firm as well. And we ask people to look up what credit rating sector is. And actually, I've seen an abundance of people looking up like videos and looking up, and credit rating agencies focus, the fundamental thing is fundamental credit analysis. And actually, it's a really good tool to look at, how things are looked at. And the more you look at it, the more layers you see. It's not just corporate credit analysis. There's like different ways of looking at like banks, countries, even like infrastructure projects. You're talking about building like huge stadiums, ports, airports, everything that we look at that goes around in our lives has some relation to credit.
Increasingly
the majority.
Yeah. Question here, very specific. Can you go over again the difference between credit risk analysts and credit analysts? And I know a little bit about this, and I don't know the difference. So maybe you do. Maybe you do, Edward.
I'll give a non-answer to it first, and then I'll give the actual answer. So different firms will refer to credit risk analysts and credit analysts in certain different ways. It's all about perception, how things are. Some firms, and predominantly I'd say banks in this example, will refer to credit risk analysts as credit analysts. So this is where it kind of gets confusing, but credit analysts, in my perception, are different to credit risk analysts. So credit risk analysts, you might be looking at building models. It also would be, so there's different types. You can be the counterparty bit, which I talked right at the beginning, which is a large number of entities that you're looking at, fast pace. A credit risk analyst could be looking at some sort of regulatory topics, and it could be looking at, maybe slightly more of a retail environment. But there are so many different, and it could be credit risk, like policy analyst and so on and so forth. There's loads of different ways to look at it. Whereas the fundamental credit analyst would typically be that person who is looking at financial statements, financial information, really getting under the bonnet of a company, like what do the financial results mean? Does this make sense? Is this a good investment company to lend to? They are slightly sort of different roles, and there's no right or wrong route to take. They're all interesting. They're slightly different skill sets. One's more sort of financy and looking at financial statements and accounting and information on that side of things. And the other one, and the other one's actually, as we say, pretty broad.
Do you see ESG becoming a bigger part of the credit analyst role, or will there be a separation so that you'll have ESG analysts and credit analysts?
Very good question, very topical. So historically, as the ESG sector has evolved, matured and grown, ESG has typically been part of a credit analyst. So if we talk about a credit rating agency, for example, you will have some ESG considerations when you're looking at making a credit decision. However, the ESG sector is growing and evolving, and you're starting to see some people, you may talk about a sustainable Fitch or another sustainable financial institution company, where they look at that company is solely focused on sustainable ratings and analysis. And actually, it might be that you might be, for example, an investment manager, and you maybe don't have the time to do the real deep dive digging into ESG considerations, and you might want to get a report or access to a report where you can get those ESG considerations. Ultimately, there's so much information out there. I see some people focusing their careers, or some people starting to focus their careers on ESG, and there are definitely some similarities between ESG analysis and credit analysis, looking at things with a different mindset. But in summary to that question, more often than not, if you're a fundamental credit analyst today, at most firms, ESG is going to have to be something that is in your mind, something that you're thinking about, because that's not going away, and that's a really important consideration for many institutions.
I'd concur with that. I see it in other asset markets, and ESG is being integrated within the other analyst roles, rather than something which is diverging away and becoming very separate, which is important and a good thing depending upon your point of view. Now, this one definitely is a question for you, Edward, in your role as a headhunter. Hello, I'm a seasoned analyst approver looking to move from Central Europe to London. You may want to get in touch with this person directly, actually. Could you advise on the market outlook, and where would be a good place to start my search? Well, I can think where you can start the search, but Edward, what about the London market?
I think you're inferring that they should get in touch with me. But,
possibly.
Yes, so if you're someone who's based in anywhere, and let's say, for example, this person specifically has asked for London, so I won't go into the pros and cons of Brexit, but Brexit has meant the UK, unfortunately, the cons are the fact that the EU market is no longer accessible, but that means actually people globally, it's a lot easier to move, or it is easier globally to move to London. You just need to find either an institution that will sponsor you, or be able to find your own visa. But I think making yourself, updating your LinkedIn profile to say that you're open to opportunities in London is definitely a good thing. Trying to look at firms where you can utilise your skill set, and actually applying to those institutions, whether via headhunter or directly, that can be helpful. I think the key thing is being proactive about it, making sure you put yourself in either able to be found or trying to be considered for those sort of roles. But as we said before, credit is an international skill set and market.
How do you stay updated on emerging trends and best practices in credit risk analysis? I think that might be a summary of some of the collection of points you've already mentioned.
Keeping updated. So trade body, so a lot of the time trade bodies and trade qualifications will have alumni sections, keeping in touch with your peers, reading about the regulatory reports aren't always the most riveting and eye-opening things, but some of the time there are nuggets there, or otherwise if you find someone who can read it and summarise it for you, there's plenty of things and ways that you can do to look at that depending on your job. But yeah, just generally, I think kind of reading the press and talking to people, having a network of people within the credit community. Things are constantly evolving, and keeping up to speed. You shouldn't just rely on it coming to your desk. You should be trying to ask about things and trying to be as proactive as possible.
Thank you very, very much for your contributions today. We wish all success to you and your colleagues. I've got one question here which wasn't planted either, which it's a great timing question. How can we access the webinar recording, Well, you'll find the webinar recording, and this time I'm going to get the title right, Careers in Credit, Your Pathway to Success. You'll find this on the GICP website, together with more of these webinars and indeed a whole host of information on credit. Some of you asked questions about the types of qualifications you need, so there's information there. And so all it leaves me to do now is wish you success in your career in credit.